Okay, happy Memorial Day. This is going to be a weekly recap from the 23rd to the 27th, and I'm very thankful for this holiday for a lot of reasons, and one of them in regards to trading is that I'm just able to have Monday off, and I was pretty frustrated this trading week, and on top of having Monday off, that means we're going to have only 4 days of this week to trade, which means less trading days and just, a nice 3 day break. It was really nice to be a part of it. And yeah, this week was really frustrating. But I think the most frustrating thing was that the two trades, as you can see here, that did not work. This one, actually the three trades. Look at my dollar risk level. I traded the appropriate amounts of shares in order to accommodate and have a $20 risk level. I did that in this one and I did that in this one, but then when you look at my winning trades, this one was fine. This was a $20 risk level trade. I traded the right amount of size for this one. But then this one, this is a listed stock, I believe. Yeah, this is a listed stock, so I needed to have traded twice the amount of shares on this one. And then this trade right here, I traded, again, half of what I should have traded. That's what I should have traded. And then this one was just like a practice trade. And I would still be red on the week. This one was pretty bad, but I could have traded this one better. I could have lost a lot less. But yeah, I ended up having just a $9 loss for a week, just under $10. And compared to the other weeks, sure, it's, in the grand scheme of things, I'm still like making money overall, and I am trying to size up and trade a $20 risk level. Before I was trading a $15 risk level, then a $10 risk level for a very long time. I am trying to size up, but I think I'm going to stick to a $20 risk level until I can like nail it to get like a really good green week. And if I feel better and more confident, I'll continue to move forward and then go to a $25 risk level. I had a total of 7 trades, 4 green trades, a little more than half. But again, the problem was is that on the losing trades, I just had a lot more size, and it didn't really help out in that the average gain was, just under $2, and then my average dollar loss was 5 because I had this $10 loss right here. And the percentages, yeah, they weren't good here. I don't like, again, how I traded more on the setups, or at least not more, the appropriate amount of shares, and then on the other ones I was like undersized. That was really about it. I mean, yeah, just losing $10, trading $1,000 of dollar volume. It's nothing too bad. It's not crazy. It's not like I traded just, $20 worth of, position sizes and I lost half or something like that. That wasn't the case at all. But yeah, let's just go over the trades one by one. Only 7 trades, and starting with RMSL on the 23rd, which is a previous day high morning breakout. Let's look at RMSL for the 23rd. All right, we're already on RMSL. Right here's the 23rd, so it was still a continuation. I think I traded this still in the morning, but it did downtrend and it did have a few red days afterwards, and I will be looking forward to this for a morning panic bounce play this week, or if it tries to break above this 4 cent level, I will be very interested in that as well. Let's go ahead and highlight the 23rd, which is back here. I was in at 932, 5,000 shares at 418. So 932, let me zoom in a bit more. I was in right here, 4,000 shares, I believe. How much was it? 5,000 shares at 418. So I was in it right here. And why was I in it? Well, as you can see, it had a pretty nice move and it looked like it was going to break this 418 level and then be like a nice morning spike. As you can see, the previous day high here was 413. So that this day right here, we're already having this spike and it's heading towards that 413 level and it breaks it. And then it has a top right here. And then the next candle, tops. And then this one after that. I got in right here because I thought it was going to do it right then and there. It really looked like it, but it didn't. It had 2 more candles of consolidation right at the highs, which was a little nerve-wracking because this thing could have head towards VWAP at any point and then really turn around and maybe even start to panic, especially after it's been up so many days in a row. But it did eventually make a move and it just got a little higher before it sold off. I did get out ultimately at 936, at 420. So 936 I was out at 420. And I believe I sold right here half of my position when I saw it wasn't working right then and there. And then at 936 I sold the other piece and my average ended up being 42. It did get to 43, but it didn't do much more. It didn't continue. It obviously, made a top right here. This was the ultimate top, and it started to have this panic right here. I did miss this turnaround. I was interested in this. And yeah, that was a pretty good attempt for what it was. Let's look at the next trade, which is IGEX, and this is the one that was the big red trade, and it doesn't help because it was a sub penny stock, so just two pieces being moved on a sub penny stock can really make it impact a lot in terms of a percent loss. And yeah, this one really sucked, but I traded this one almost the best that I could have. There was one thing I could have done better. Let's look at IGEX for the 24th. 24th is right here. And as you can see, I was interested in it because the other day it closed at this 4 cent level, sub penny level, and then right here it had a huge drop from the previous day. And I've seen a lot of these work where, it has a big gap down and then it holds a support level and then it uptrends massively and it becomes super profitable. I think an example of that was, I think I might get it wrong. Oh no, actually this was at MJWL. As you can see, this one had a drop from this 4 level, and then it opened super low into sub penny territory. And if I can go over the 16th, I guess it's going to be hard to tell, but as you can see, it did get as low as this level right here, and it just made a super crazy move. So that's kind of like the idea I had with IGEX. Let me get back to where I was. And let's go back to a regular chart. 24th is right here. I was in at 9:31 a.m. 27. Let me zoom in a bit more. I was in right here at 27. Why? Because it opened, it had a lot of volume. This candle had a lot of volume too, as you can see, but it really looked like it was going to break this 27 level and then start to uptrend over a longer period of time. And as you can see, it did it, but it had a little drop first, which threw me off, and that really sucked. And the only thing I regret, before I get too ahead of myself, let me go over my sell. I was out at 9:34 at 25. I got out right here in this candle when it looked like it was going to break 25, which was support for these past few candles. And it did get as low as 23. So, I mean, worst case scenario, I would have gone out at 23, which would have been worst case scenario, and I would have lost exactly my $20 risk level, which is fine. But the only thing I wish I did better with this one is that I got in right here, then the next candle wasn't looking too nice, and then this one was looking worse. I have plenty of chance to cut my position in half and sell half of my position at 26, and I would have lost a lot less, and sure, it would have been a loser trade regardless. And if I didn't stick to my plan and cut the day low, I would have had to have sold into the level breaking, and then with slippage I would have been out at that worst case scenario, the $20 loss. But if I was able to sell half at 26, I would have felt a lot better. I was a bit too uneasy with the way this one was trading. I just think that maybe next time in a situation like this, I'll have that ability to cut half of my shares immediately, and then it would help me a lot better. And that, if it fails like it did here, I would lose less. Or if it works, at least I cut my position in half so I had more patience. And, be in a smaller, nerve-wracking situation and, continue to profit from there. Again, it did make a move, but I was expecting this level to hold right here and break 27, but it did it later. Yeah, 23 to 29. Best case scenario at 3. That would have been super profitable. I wasn't expecting this. There were just too many sellers that kept dumping their shares, and that's what eventually led it to bring it to that lower level before it turned around. This was a good attempt for what it was. Let's look at the next trade, which is ALPP, and this is a morning panic bounce play. It didn't help that this was a listed stock, so I traded, or at least I was supposed to trade a $5 risk level, and then on top of that, I traded just a tiny amount, half of what I was supposed to trade. If I traded this with a $15 risk level, I guess What would I have had to trade 1,500 shares? I guess 2,000 shares would have been a $20 risk level. That actually would have made me just barely profitable on the week. But it is a listed stock, so I did trade a smaller $5 risk level. But I might consider trading a $20 risk level on listed stocks that used to be OTCs. This was one of them. Let's look at ALPP for the 24th. 24th is going to be right here. Not a very significant red day, but I guess I did break this 70-cent level, so I guess it wasn't horrible. Let's go ahead and look at the 24th, which is right here. All right, I was in at 937.64. 937. I'm going to zoom in a bit more. I got in right here at 64. Why? Again, morning pending bounce play dropped from the 70 level as low as 62, so that's more than 10%. And then I got in right here because it looked like it was going to turn around. It broke a trend line, and it looked like it was going to break this round number 64 as well. And as you can see, it did work. I mean, it got to 67, but I don't like the way it got there. That's all ugly. Just, you know, not the best move. It just didn't have the volume to really make this thing super nice. I did get out at 940 and my average was 64.62. So at 940 was right here, 64.62. So I technically sold right here, but what ended up happening, actually no, 64. Yeah, I got out like right here. What happened was is that it did the thing here, I'm in it, but then I didn't like how it wasn't working immediately, so I did sell, I believe, half of my position at 64. And then what happened was is that when it started the uptrend here, then it got higher the next candle, I sold the other half. I think I sold the other half at 65, and then it just rounded off to that level right there. And that ended up being the trade. I don't regret that I sold half of my position, or maybe a portion of it, since it's 250 shares. I don't think I traded exactly half in two pieces, but I don't mind that I sold a piece when it didn't look like it was working, because I'd rather be in that situation where a morning panic bounce play doesn't work out, but I at least cut half for a small amount of, you know, difference from my entry, or maybe even break even, and then lose a lot less on the other half if it, you know, is worst case scenario, which would have been right here if it were to have broken 63. That was a good trade for what it was. I just wish I traded that with more size. Let's look at SYXX for the 24th. For support, hold, reverse trend line. Those never really seem to work when I just buy a stock because it looks like it's just going to reverse. It's like one of the worst setups. I need to probably just stay away from it. Well, let's take a look at SYXX. If it lets me. 24th is right here. Yeah, pretty crazy potential day because it looks like an ascending triangle and it could just be explosive. And yeah, it did lead to an uptrend, but it looks like it's downtrending, so pretty sketchy stock. Let's look at the 24th, which is back here. Yeah, that's about it. I got in at 10 o'clock, 663. So 10 o'clock was right here at 663. Let me zoom in a bit more actually. Yeah, around right here, 10 o'clock at 663. Why did I get in? This thing looked like it was going to break a trend line, I believe. It's going to be hard to make it, but I'll try. I guess in theory, maybe something like this. Right, you can see how I had like a top here and a top here, and I kind of traded off of that. And it wasn't too bad that it even had, as you can see right here, a little blip that breaks it, and then it comes back, which shows that it might actually try to turn around. And again, I was in at 10 o'clock right here. That's actually not really a bad setup for what that was. And I got out the next minute at 657. And I got out right here at 657. So why did I get out? This was really dumb, but I think when it comes to choppy stocks like SYXX and I'm trading something off of a support level, one thing take into consideration, I think at the time, like it was holding the previous day close or the previous day high, I forgot. But there was like a support level here around 64. It had this drop, it breaks the trend line, and then I'm in at 10 o'clock, which as you can see, this ended up working out pretty nicely, but I obviously sold right here the next candle like a chump before it turned around. And the reason why that happened is because I had a trend line as a risk level. And I think that's something I should probably add as a recap for this video as to what I should do differently to be better. But essentially, I saw this. I was very, anxious about trading. This is not something I have that much experience with when I'm trying to get better. And it breaks the trend line and all. But then I got in here at 10 o'clock and I had this trend line right here. And what happened was is that when it broke it, I immediately got out, even though I followed it more often than not. It wasn't really a perfect situation. So I think in the future, if I'm going to trade and have a trend line as a risk level, when the setup hasn't proven itself yet, what I'm going to do is either not use a trend line because, they're not exact, especially with a choppy stock like SYXX, or I can move the trend line maybe a bit further away, and then it can be like a looser trend line, and then that could still help me. So I think that was a good lesson with that. It really frustrated me because I got to this level, which is VWAP, and, I sold the next minute right here before I started the work. Feels like a really newbie mistake. Let's see what it would have been like if I sold at 68 out of curiosity. Yeah, that would have been nice. Not a crazy percent gain, but that's not even taking into consideration best case scenario. Yeah, totally something I could have done. Yeah, that was a pretty good setup. I just traded it badly because I had that tight risk level, and that's a pretty good lesson. Let's look at CYBO, which is a morning panic bounce play for the 25th. 25th is right here. Not a very significant day, but I like CYBO because this thing can have really nice morning panic bounce plays. Not the most amount of volume, which isn't a big problem for me right now with the amount of size I'm trading, but it still offers a move, and this was clearly one. I was in at 934, 119. 934 is right here, and I got in at 119. Morning panic bounce play, breaks the trend line, starts to turn around. I'm in right here at 119. Worst case scenario, I'll cut the trade if it breaks 116. And as you can see, it did get to this 12.8 level, which is nice. I did get out at 12.2 at 938. So right here, I got out at 12.2. And I think I sold half of my position at this 12 level. And I think I sold the other half at like a higher level, and then it averaged out to 12.2. I think I sold in two pieces. Let me be sure. I guess it doesn't really say right here in my notes, but the only thing I could have done better with this trade right here is that, yeah, I didn't trade enough shares. That was the only thing wrong. In theory, I should have traded a $20 risk level, which would have meant 20,000 shares, and I would have made a lot more. As you can see, there's a lot of things I could have done differently this week to have been more profitable. But again, the most frustrating thing was that on the setups that were working, I didn't trade, the right amount of size on my winning trades, and then trades like SYXX ended up being a losing trade. But the setup worked. I just had it too tight of a risk level. All these little things, pretty unlucky. I'm going to be pretty unlucky if it ends up being worse, but I think at this point things can get a lot better, especially because I learned from these lessons and improved. Let's look at GESI for the 26th, and this is the first step under VWAP. This one's a very sketchy stock. 26 is right here. Yeah, first red day. I'll be looking for this one as well for a potential morning panic bounce play. 26 is right here. Although I know I'm going to have to zoom in this setup again. Yeah, I might as well do it right now. This one was pretty frustrating too. I traded this one. I bought 50 shares at 9:49 a.m. 4965. Let's just say 491 at 9:49. Right here, I was in at 9:49. Why did I get in it? Here's a previous run. This thing, I'm not calling it a pump and dump, but it looks like one. This thing had a high at this, what is a high? This 520 level. So I was watching this one. And it started to have a crazy move, and it broke the 520 level, got as high as 525. And then it sold off. And then when it sold off, you can almost see where it broke a downtrending trend line. As you can see, right, it broke. It actually even kind of followed it a little. Because when it got out of it here, the panicking stopped. But I was interested in it because, again, it broke the previous run up high, and then it came right back under VWAP for the first time. And then I thought, it broke this trend line as well. I can be in it right here at 491, and it could try to turn around and try again. Maybe get close to the day high, or maybe get right at it, or break above it and be a continuation. But this ended up being the first red day. Pretty impressive. And I was going to cut the trade if it was looking like it was going to break the day low, which was around this 485 level. And that's exactly what I did. I got out at 950 at 485. Right here, I got out at 485 because it was looking like it wasn't going to uptrend, but it was going to break the day low. And I had this in mind that if it were to do something like that, it could have a huge panic seeing how many days it is up in a row. And I'm very happy that I cut the trade as soon as I saw this price action was hitting my risk level, and that avoided me from, losing a lot. This one was pretty frustrating right here. I never traded it, but I had my finger on the trigger, the buy at 382, and then it just shot up, and I didn't want to chase it, and it got all the way to 424. That really frustrated me. But yeah, just a lot of frustrating things that happened that week. And this was a pretty good trade in terms of how I traded it. Obviously didn't work out, and it really panicked. But I obviously traded this one really well because I cut it right then and there when it was looking like it was going to break the day low, and it avoided me from losing a whole bunch of money. I still lost like $2, but I mean, that's fine. And I traded the right amount of shares. Let's look at the last trade, which is SYXX, VWAP hold, and this was an $8 position. I just wanted to learn from the price action. Let's look at SYXX for the 27th. 27th is right there. Yeah, it was the last day actually. Right here. And then this is going to be the 27th. I got in at 9:42 a.m. 815. Let me zoom in a bit more. 9:42 was right here at 815. I got in right here because it looked like it was going to not break under VWAP and panic, but it was actually going to hold it in uptrend. If you watched the video I posted on Friday, which is going to actually be, the 27th, I went over just how I've been trying to learn from this price action that SYXX has. It's a very choppy, very ugly stock, but essentially to summarize it, a lot of times it looks like it's going to panic and break a support level, as you can see right here, at this round 8-cent level, but then it just turns around and goes to 82, and then it goes to 84, something more drastic than this. And I think what I've started to learn is that I have to take into consideration not how many prints are going on in the time and sales, but I need to take a look at the level 2 and how many shares are actually being hit, whether it's a sell or a buy in the time and sell section, and judge that instead of just seeing a whole bunch of red going through, but there's only like these tiny little amounts of shares going through it. Then it just turns around and does something like this. I think that's pretty much what I went over on Friday, and it did kind of uptrend. It got to 84, right? But it wasn't perfect, but it was a good attempt for what it was. I did get out at 9:49 at 82. Right here I got out. It might have been this one right here, even though it says 950. Why did I get out? I got out because another stock, RMSL, was looking like it was going to turn around and actually try to break this 4-cent level right here, as you can see, but it did fail, but that was fine. I got out of SYXX to focus on what looks like a better opportunity. And it did have a panic, but I don't mind missing this one at all because this one just trades all ugly. But it did make a move, and that's it for this week. I hope I can do better this week. And yeah, this is pretty much it for the weekly day trading recap. I hope I can do a lot better once again, and a lot of good lessons were learned. That's all I have for this.